As of the market close on Friday, April 17, 2026, NUBURU stock, trading under the ticker BRURU, sits at 20 cents per share. Throughout the final session of the week, we saw an intraday range between 20 cents and 21 cents, with the stock ultimately settling with a minor loss of roughly 0.5% on the day. Today, Saturday, April 18, 2026, the market is closed, but the conversation surrounding this penny stock is anything but quiet. Looking at the volume, we saw over 14 million shares change hands in that last session, which is significant for a company with a market cap sitting right around $31 million. While most traders are staring at that 20-cent price point and seeing a struggling microcap, the reality is that the company is currently in the middle of an aggressive, high-stakes pivot into the defense and security sector that most of the retail crowd hasn't fully processed yet. The expectation for NUBURU has long been that it's a niche laser manufacturer for industrial welding that simply couldn't find its footing or its cash flow. The reality, however, is that management has spent the first few months of 2026 essentially gutting the old business model and replacing it with a dual-use defense platform. If you're looking at the ticker on a simple Robinhood app or through your primary investment site, you might just see the 52-week high of $4.24 and wonder how it fell this far. But the deeper story here is about a total structural reorganization. In February, they closed a $12 million public offering, which, while dilutive, gave them the oxygen needed to activate a production ramp for their high-power blue laser systems. We aren't just talking about lab experiments anymore. They are moving into a structured production phase for units intended for everything from agri-tech automation to directed energy defense. When you look at the recent price action, it's a classic battle of institutional activity versus retail skepticism. We've seen major players like UBS Group and Geode Capital Management actually increasing their stakes recently, with UBS moving into a position of over 4 million shares. This is happening while the short interest has been a massive cloud over the stock. At one point earlier this year, short interest grew by over 80% in a 2-week window. This creates a massive tension. The market narrators are telling you the company is a sell because of its $79 million net loss in 2025 and its zero revenue year during the transformation. But the contrarian view, the one that sophisticated investors at firms like Fidelity or those using more advanced interactive brokers trading tools are watching, is the $20 billion global counter-drone market they just entered. NUBURU recently secured a funded prototype build phase for a joint venture with Maddox Defense. They are targeting a U.S. government demonstration for a portable directed energy laser platform. This isn't just a maybe anymore. They are actually building the hardware. Most people look at the current price and think it's a dead end, but the reality is that they've been clearing their balance sheet, eliminating over $8 million in preferred liabilities recently. It's a very risky, very calculated bet on whether their 450-nanometer blue laser technology can actually take down a drone in a cost-effective way compared to traditional kinetic weapons. Let's talk about the trading environment for a second. If you're using SoFi Invest or maybe a more basic online investing platform, you might be tempted to jump in because it looks cheap. But the reality of penny stocks at this level is that they are highly sensitive to news-driven volatility. We saw this in March when they announced the Maddox JV. The stock spiked nearly 30% in post-market trading, only to give all those gains back and then some by the following day's close. This happens because the expectation was a moonshot, but the reality was that traders used the news as an exit door. It shows you that there is still a lot of trauma in the investor base from the previous year's performance. Comment below how many shares of NUBURU you currently hold, or if you're staying away from the defense tech sector entirely right now. I'm curious to see if the sentiment here matches the institutional buying we're seeing on paper. Understanding what NUBURU actually does is key to seeing through the noise. They were founded back in 2015 as an industrial laser company. Their core claim to fame is that blue lasers are much more efficient at welding certain metals, like copper and gold, than traditional infrared lasers. This is huge for battery manufacturing and electronics. However, the business model has shifted. They are now focusing on a defense strategy called non-kinetic. This means using their lasers to disable electronics or physically burn through drone components from a distance. They've also been busy with acquisitions, taking a 70% stake in Techne, an Italian company that is targeting revenue of over 100 million euros by 2027. This isn't the same company that was trading a year ago. The financial reality is still the biggest hurdle. You can't ignore a $200 million accumulated deficit. For a self-investing individual, that's a massive red flag. They have $24 million in cash as of the last report, which is an improvement, but they are still burning through it as they ramp up production. If they don't hit their revenue targets with the Techne integration, or if the government demonstrations don't lead to a formal contract soon, they likely will have to return to the market for more capital, which means more dilution for existing shareholders. This is why you see the stock hovering at 20 cents despite the positive headlines. The market is waiting for the actual checks to clear.
When you compare this to the momentum we've seen in larger names like Nvidia stock or Apple stock, it's easy to feel like you're in a different universe. Those are safe bets on established trends. NUBURU is a speculative bet on a technological shift in warfare and industrial automation. If you're looking for investment help, most traditional advisors would tell you to stay away from something this volatile. But for those who use platforms like Robinhood stock trading for the lottery ticket potential, the appeal is obvious. The risk is that the reality of their burn rate will catch up with them before the expectation of their defense contracts can save them. Institutional activity is the one thing that should make you do a double take. Why are hedge funds buying in when the company has zero revenue? Usually it's because they have a longer time horizon than the average retail trader. They are looking at the intellectual property. NUBURU has a deep patent portfolio in blue laser technology. Even if the company fails as a standalone entity, that IP has value for a larger defense contractor that might want to swallow them up for their technology. This is a common endgame for microcaps in the tech space. Looking forward, the catalysts are very clear. We have the April 2026 Golden Power filing regarding the Techne acquisition. If that goes through without a hitch, it legally clears the path for NUBURU to become a much larger, more diversified player. Then we have the Q1 2026 production ramp results. We need to see if those 40 high-power systems actually ship, and if the revenue hits the books. Finally, the big one is the US government demonstration. In the world of defense, a successful demonstration can lead to a program of record, which is where the real growth happens. The risk is equally clear. The stock is currently under a massive amount of pressure from short sellers and is trading near its 52-week lows. If it breaks below 0.15, there isn't much technical support left. The market has a very low tolerance for potential right now. It wants results. If management doesn't deliver a concrete revenue beat in the next 2 quarters, the skepticism will likely become a self-fulfilling prophecy. In summary, NUBURU is a company in a state of total metamorphosis. The expectation is that it's a failing penny stock with a history of dilution and losses. The reality is that it has successfully cleared its balance sheet of some major liabilities, secured institutional backing from some very smart players, and has pivoted into a high-growth defense sector with working prototypes. The contrast between these two views is why the stock is sitting at 20 cents. It is a battle between the ghost of its past performance and the potential of its new defense-first strategy. Whether you're using Schwab Intelligent Portfolios or managing your own individual brokerage account on Interactive Brokers, this is the kind of stock that requires you to decide if you believe in the tech or if you're just afraid of the balance sheet. We've seen the price bounce between extreme highs and lows, and that volatility isn't going away anytime soon. The move into the counter-drone market puts them in the middle of a global security priority, but they are a very small fish in a very big pond. The next few months will determine if they can scale their production and turn those prototype builds into a repeatable, profitable business. For now, the reality of their financial struggle is keeping the stock grounded, while the expectation of a defense breakthrough is what's keeping the volume alive. It's a fascinating study in market psychology, and a reminder that in the world of microcaps, the headline is rarely the whole story. As we move into the next week of trading, keep a close eye on the 0.21 resistance level. If it can clear that with sustained volume, we might see the narrative start to shift in favor of the bulls. Otherwise, it's a long wait for the next set of earnings and the results of those government trials. Authority in this market comes from patience and a deep understanding of the underlying mechanics, and with NUBURU, those mechanics are shifting by the day. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.